Good evening, everybody. Thank you very much for joining in. This side, Rahul Magan here, acting as the Chief Executive Officer of Treasury Consulting LLP. And today we are going to cover Euro GBP on our YouTube channel. As you very well understand that we are having our YouTube channel on which we are trying covering almost every different topic for you. And this time we plan to cover a volatility gauge, a kind of volatility gauge which is very much applicable in the foreign exchange market for you people, and this is Euro GBP. And in this topic we are trying to take you to some very important aspect of this volatility gauge, which is Euro GBP. And we will let you know that in case you have any Euro exposure or any GBP exposure, then how you should move and what should be the appropriate way to move on. As you very well understand that markets are getting very much volatile, and there are a lot of talks which are happening that now the scene is beyond the central banks of the globe, which includes Federal Reserve, ECB, and others. And at the same time, we should also very much appreciate the fact that things are getting a lot of volatile. If we go by the statement of the PIMCO, then we would get to know that almost majority of the hedges which has been taken up by the hedge funds, they are into the losses. In that regards, currency volatility turning out to be very important. And as you know that although you have a lot of instruments which can help you to take a hedging position in the currency volatility, at the same time we should appreciate the fact that we should know that how the trend of the currency is and which all is moving the trend of the currency. In that regards, today we are covering a topic which is known as Euro GBP, which is acting as one of the volatility gauges across the globe. Now, what do you mean by Euro GBP is, as you know very well that Euro and GBP both are the most volatile currencies of the globe, and they can swing even by several big figures in a day. So sitting today, which is approximately 12th of October 2016, GBP is trading at 1.22. It has just recovered a little bit from the yesterday night crash. Not crash. The first they faced the flash crash, which took them to 1.19. And then they recovered little bit, and now it is trading at 1.22. Like yesterday night we mentioned that the next few trading sessions would be very important for for GBP, because this will determine the future course of the GBP. In our view, GBP is heading towards 1.17. If not today, then probably next few trading sessions could be next week. And as regards the Euro is concerned, that Euro would continue to either stay at 1.10, or max to max it will go to 1.09. And that what we are saying, if there would be any negative news which will come from Deutsche Bank. So if we look at this chart, because Euro GBP is also known as a volatility gauge, and we have taken this chart for 2 years. If we look at this chart, here it is a maximum which is approximately 0.899, which is 0.90, which is highest Euro GBP. And you know that GBP is falling. The falling GBP will take this up. As the GBP would fall, this denominator would continue to, this pair which is Euro GBP would continue to move up. However, we need to appreciate one fact very clearly, that Euro is currently looking stable and it is trading at 1.10, but ideally it should not be the case. The reason here is that European banking is facing a lot of crises, and especially Deutsche, ING, and Commerzbank, which are in the media. And Deutsche is in talks with the Department of Justice regarding settlement amount of $14 billion which they need to pay for their mortgage related investigations. And as regards their $10 billion mirror scandal is concerned, that mirror scandal is yet to come. So I don't know how much amount of money they need to pay to that mirror scandal also. However, at the same time, we need to understand that once these things would reach to peak, then Deutsche would fall. 110% Deutsche would fall. And once Deutsche start falling, things would be haywire for Euro. And I may not be surprised that by that time Euro will down to, I think, maybe 1.06 or 1.07. So currently euro is not a buy call, that is for sure. Euro is absolutely not a buy call by traders. You go with any technical analysis, you go with any fundamental, that the view is euro is not a buy call. Sitting today, the buy call is, even in fact GBP is also not a buy call. If you wanted to buy euro and GBP having a contra opinion from us, then you need to consider your stop losses very seriously, because if you fail to understand at what stop loss you need to wind up the transaction, then you are gone. As simple as that. You are simply gone. So that is few things which we would like to cover in this video. Before winding it up, we would like to show you few technical analysis, like here we'll go to Bollinger Bands. Rather than giving you Bollinger Bands, this time we'll give you stochastics RSI. Yeah, let me give you volatility stops. Now I hope you can see this volatility stops. You can see the blue line in this. Now what do you mean by a volatility? Now in this chart which you can see a blue line which is known as volatility stops. And before going higher, let me give you stochastic RSI also. Stochastic RSI, here we go. I think this. Yeah, what I do give you, we will give you stochastic momentum also. Yes, stochastic RSI, I think stochastic RSI is not, stochastic momentum could work. So once you have a volatility stop and then you have a stochastic momentum. Now if you look at stochastic momentum, you will get to know that it is going up, which clearly suggests that euro GBP would move up because GBP is falling. If we look stochastic momentum from other side, from GBP dollar side, then we will get to know that it is falling. The reason is very simple, because reason is very simple, that volatility, GBP is falling, volatility going up. If you look at the blue line which we have here, which I would say here, let me compare this blue line, the volatility stops, with the Bollinger Bands. If you look at this this volatility stops, now these are the stops where you create the volatility. Where the volatility has been created, like this stop, you have this stop. If you carefully see, if you cover this Bollinger, if you link with the Bollinger Bands, then you will get to know that the entire chart, the pattern of the chart or the width of the chart has been covered using volatility stops. It means that it is plus minus 2 standard deviation. So this is very signifying. And before winding up, one thing which we sincerely need to see here is this. Look at the breadth. Look at the breadth of that chart. Now that breadth of the chart clearly suggests that a huge amount of volatility has been gathered here. This could also be known as volatility drift. This could also be known as volatility clustering. And I would say that there are a lot of charts which are here in the market which are only because of the like these charts are here covering volatility clustering. Now if we look at this chart from another technical analysis, whether we need to buy or sell, let us cover one more, which is MACD forest. Rather than give MACD, let us give you MACD forest, because this is MACD forest. Now you can see that it is on the buy side. Now you can see that this is on the buy side. So if you look at that, you will get to know that MACD, this MACD forest is clearly suggesting that it would go up. It would go up. So all the traders who are having euro as a position, they are expected not to buy. As simple as that. Because if you buy this, then things would be little difficult for you. If you have any GBP, you are not supposed to buy. You are supposed to hold your position. you need to keep your strict stop loss into consideration. Like if you are having a GBP position, I suppose you're having sell at 1.22, assuming, and so you need to keep the strict stop loss into consideration, and you need to see that whether if it is going to 1.18 and 1.19, which can easily happen, because you very well understand that GBP can change its value by a few big figures in a day without even any doubt. So the last 2 years chart technical analysis, wherein we use several analyses. One is Bollinger Bands, one is volatility stops, then we use MACD Forest. All clearly suggest that it would move up, but at the same time, I would like to give a point of caution to all our readers, is that a lot of summits are happening, a lot of conferences are happening across the globe. Politically, leaders are saying a lot of stuff. So please be careful while taking such kind of positions, in the sense that these positions, or what I mean to say, keep yourself abreast of all the stuff which is happening around you. So technical analysis is a good tool. It will help you doing that, but at the same time, keep yourself abreast of doing this. Once you have the volatility gauges in your portfolio, which is GBP, which is Euro, which is Japanese yen. So these 3 or 4 volatility gauges seem to take into consideration. We would like to thank you very much for your help, because of that we are able to cross 200 videos on the YouTube. Our website is very imminent this week, and we'll continue to bring a lot of new technical videos to you. We would like to thank you very much, and our contact details, which is strategiconsultingllp@gmail.com, rahulmagan8@gmail.com. With this, we thank you very much, and hope to see you soon. Thank you. Have a good luck.